They say the first $100,000 is the hardest. They are wrong. It is actually impossible if you think like everyone else. I have seen people who worked for 40 years, but didn't even come close to this mark. Not because they earned little, but because they couldn't stop doing stupid things long enough to let compound interest work. This first $100,000 is like pushing a huge boulder up a hill with your bare hands. Every inch seems useless. Every saved dollar seems invisible. And then one fine day, the slope levels out, and the boulder starts rolling on its own. That is compound interest. Quiet, invisible, and ruthless. It rewards the patient and humiliates the impulsive. When I was young, I didn't have a grand strategy. No get-rich-quick schemes, no secret formulas. I just knew that if I could crawl to that first $100,000, everything after would be easier. Not because of luck, but because money would start doing the heavy lifting for me. Let me tell you what people hate to hear. Until you have the first $100,000, you have no right to talk about investing. You are not investing, you are accumulating. You are building a damn foundation. And no one builds a skyscraper starting from the top floor. When you are at zero, your best investment is not the stock market. It is your own discipline. Cutting out the excess, ignoring the neighbor's new car, avoiding debt as if it were radioactive waste. Everyone wants to know which stocks will make them rich. The truth is that no stock will save you from bad habits. I watched young people jump from one idea to another, chasing yields, while their savings account resembles a desert. They discuss diversification when they can't even keep $500 without spending it on a new phone. If you don't know how to save, nothing else matters. You will never get rich, no matter how much you earn. In my early years, I learned that the first $100,000 teaches you through pain. And pain is a wonderful teacher. It doesn't care about your ego, your credentials, or excuses. It only asks, are you capable of enduring boredom? Because the path to 100,000 is never exciting. It is monotonous. It is dreary. It is like watching grass grow while everyone else is having fun. But if you can keep your sanity during this boredom, you have already surpassed 90% of people. Let's be frank. Most people are too impatient to become rich. They would rather seem rich than be rich. They trade long-term compound interest for short-term dopamine. They think financial independence is about finding the right investment, when in reality, it is about avoiding stupid behavior for decades. If you have a decent income and you cannot save $100,000 in 10 years, the problem is not the economy. The problem is you. You lack discipline. I'm not trying to insult anyone. I'm just describing reality. The world doesn't care about your feelings. It rewards behavior that works. I remember Warren once said, "You don't need to do extraordinary things to get extraordinary results." He was right. You just need to avoid constant stupidity. Reaching the first $100,000 is mainly the skill of not screwing up. Don't buy what you don't need. Don't chase every hot stock tip. Don't try to impress people who don't care about you. The irony is that as soon as you reach this milestone, you realize something amazing. You are already a third of the way to $1 million. It sounds mathematically absurd, but it is true, because the habits, discipline, and mindset you forged to get to $100,000 are the same tools that will carry you through the rest of the journey. The next $900,000 won't be earned the same way. Money will start to grow faster than your efforts. Your savings rate matters less, your investments matter more, and time becomes your ally, not your enemy. But no one gets to this stage without going through the grind of the early years. Lonely, quiet, exhausting, That period when you save money while your friends laugh, when you skip vacations, drive a beat-up car, and pretend you don't care. That is the tuition fee you pay for financial freedom. Most people never pay it. They want the diploma without the suffering. They want to be rich without acting rationally. They think they can outsmart math. Well, good luck to them with that. Money doesn't respect talkers. It respects those who save. And the moment your money starts earning more than you cross the invisible line between working for money and money working for you. That is why I say the first $100,000 is not just a number, it is a transformation. It is the point where discipline becomes habit, and habit becomes wealth. You will notice how your mindset changes. You stop worrying about market noise. You start understanding opportunity cost. You no longer ask, "Can I afford this?" You ask, "Is this worth slowing down compound interest for?" That is when you realize that wealth depends not on intelligence, it depends on temperament. And temperament, unlike intelligence, cannot be taught. It must be earned through years of consistently doing boring things. So, yes, once you hit that for $100,000, you are not just financially a third of the way to $1 million, you are mentally a third of the way there. The rest is just arithmetic. Most people think money makes money. That is not entirely true. Behavior makes money. Once you have crawled to the first $100,000, you have already mastered 90% of what matters. The rest is just letting time and consistency do their quiet work. Let me be clear. The next 900,000 won't come from genius. They will come from not destroying what you have already done. You would be surprised how many people sabotage themselves right after they pull ahead. They reach one small milestone and then immediately inflate their lifestyle. They switch from a Toyota to a Tesla, move from a modest apartment to a dream house, and suddenly their compound interest engine collapses under the weight of ego. I have seen it hundreds of times. They are not building wealth, they are upgrading consumption. They win the game and then start over from zero. The truth is that once you get your first 100,000, money starts helping you, but only if you make it work harder than you work yourself. The problem is that most people treat their savings as a temporary hostage, planned to be released as soon as it screams loud enough. If your money could speak, it would beg you not to rescue it from compound interest. At this stage, discipline is more important than intelligence. You don't need a PhD in finance. You just need to keep doing boring things. Stay the course, reinvest dividends, do not experiment. Do not engage in optimization. The trick is not speed, but survival. Everyone wants to be the hare. Few have the patience to be the tortoise, but the tortoise never goes broke. When I was younger, I realized something unpleasant. You cannot multiply wealth if you constantly reset your base. Every time you spend the principal capital, you kill your future income. It is like digging up a tree to admire its roots. That is why the first 100,000 is the hardest. It requires self-control in a world that encourages self-indulgence. As soon as you cross this threshold, you have built a machine that can feed itself. But if you start feeding off it too early, the machine will die. You must protect compound interest like a fragile ecosystem. Do not disturb it. Do not get clever. Do not try to guess the market. Just let it breathe and grow. You see, true wealth creation depends more on temperament than on talent. And temperament is not fun. It is the quiet confidence to sit still while others panic or show off. I remember the early years at Berkshire Hathaway. We didn't chase fashion. We sat on piles of cash, waiting for sensible opportunities while everyone else went crazy in the market. People called us boring. Good. Boredom works. Do you want to know what doesn't work? Impatience, debt, ego. Passion kills compound interest. Debt suffocates cash flow. Ego blinds judgment. These are the three diseases that keep people in poverty, no matter how much they earn. If you earn $100,000 and spend $110,000, you are not middle class. You are a bankrupt person with a good credit history. It's funny. People think that getting $1 million requires genius. No, it requires just not being stupid for long enough. That's how I did it. That's how Warren did it. That's how any sensible person does it. You start small. You save obsessively. You avoid envy. And one day you wake up and realize that compound interest has replaced effort. When your investments start earning more in a year than your salary, you move into a different game. Then you realize that money has inertia. Money doesn't sleep, it doesn't complain, and it doesn't get emotional. But it has one weakness. It is fragile in the hands of a fool. That is why I tell young people, after your first $100,000, the challenge lies not in earning, but in restraint. Don't touch it. Don't celebrate it. Don't show off. Every dollar you pull out today steals $10 from your future. Every impulsive decision hacks a branch off your compound interest tree. You must think in decades, not days. Warren and I like to joke that the stock market is a place where impatient people transfer their wealth to patient ones. Actually, it is not a joke. It is a business model. And the funniest part is, patient people don't even need to be geniuses. They just need to keep showing up, avoid huge mistakes, ignore the noise, and let the world's greed and panic do the heavy lifting for them. By the time your net worth crosses 200 or 300,000, the process will start to accelerate. The behavior that once seemed like a sacrifice now becomes automatic. You are no longer saving money. You are accumulating character. That is why I say, the next 900 come easier. Not because the world changes, but because you change. You have stopped being your own worst enemy. You learn to ignore the nonsense that keeps everyone in poverty. Envy, comparison, FOMO. You stop caring what your friends drive. You stop chasing every once-in-a-lifetime opportunity. You stop apologizing for being boring. Congratulations. You have become dangerous. Because a rational person with money, time, and discipline is unstoppable. Such people don't need motivation. They need silence. They don't need luck. They need patience. They don't pray for opportunities. They wait for them like predators in the dark. This is the stage where wealth becomes inevitable. You have crossed the psychological Rubicon. You are no longer someone trying to get rich. You are someone who simply cannot stay poor. And this is perhaps the real secret no one wants to hear. When you start, time seems like your enemy. Every day you wake up, and you are still at zero. You save a little, invest a little, and the numbers barely move. That is because in the beginning, time does not work for you. It works against you. You trade hours for dollars, effort for survival, and it is exhausting. But once you overcome the first 100,000, something magical happens. If you are rational enough to notice it, time switches sides. It stops being your boss and becomes your employee. Your money starts making money while you sleep, while you eat, while you sit quietly doing nothing. This is not romance. This is arithmetic. Compound interest is nothing more than patience applied to mathematics. But for people who cannot wait, it seems like witchcraft. Let me tell you a secret that most people will never understand. You don't need to do extraordinary things to get extraordinary results. You just have to survive long enough for compound interest to appear. That is the part no one likes. Survival is boring. It is not spectacular. It is not viral. You can't brag about it on social media, but it is the only thing that works. I have seen investors burn out because they couldn't resist accelerating time. They wanted to do in 5 years what takes 20. They chased high yields, used leverage, ignored risk, and time punished them. Time always collects debts. If you borrow from the future with impatience, it will collect with interest and regret. Patience, on the other hand, multiplies quietly and invisibly. You don't see how it works, but it works. And when it finally reveals itself, it looks like luck. People call you lucky when you were simply consistent, longer than they were disciplined. Warren and I have been saying this for decades. The most powerful force in investing is not intelligence, it is endurance. We earned billions not because we were smarter, but because we stayed afloat financially longer than most. The market rewards those who do not engage in self-destruction. In my life, I have met geniuses who created fortunes and lost them just as quickly. They understood complex formulas, but not simple behavior. They could model volatility in 10 dimensions, but couldn't control their emotions for 10 minutes. Intelligence builds wealth. Temperament preserves it. That is why I never really cared about IQ when it came to investments. What matters is your EQ, your emotional intelligence, your ability to keep calm while everyone else is going crazy. When time is on your side, you don't need to predict the future. You just need to not run out of money before compound interest does its job. The rich do not move faster, they last longer. If you have ever watched a forest grow, you understand compound interest. In the first decade, it doesn't look very impressive, but by the 5th or 6th, you are standing under something massive, unstoppable, and self-sufficient. This is your wealth when you respect time. And as soon as this process begins, the game changes completely. You stop asking, "How do I earn more money?" You start asking, "How do I not interrupt compound interest?" You realize that interruption is the real cost, not taxes, not inflation, not even bad years, but specifically your interference in the process. You start thinking like an owner, not a worker. You stop checking the portfolio every day. You stop reacting to headlines. You start thinking in decades, not days. That is when you know you have financially matured, when you can live a whole month without doing anything stupid with your money. And what's beautiful is you start seeing time differently, not as something to spend, but as something to harvest. When I was in my 40s, I realized that for most people, the problem is not money, but time. They waste it chasing shortcuts, gossiping about markets, or trying to look smart. They don't understand that compound interest doesn't care about cleverness. It cares about consistency. If you are consistent long enough, even mediocre decisions become magnificent. But if you are inconsistent, even genius won't save you. Such is the paradox of wealth. The slower you go, the faster you grow. You don't have to do everything right. You just need to do less wrong over a very long time. This is what most people cannot digest. They want thrills, not results. They want action, not accumulation. They want money to entertain them, not free them. And so, time never works for them. It is too insulted by their impatience. If you want to make time your ally, you must stop treating it as a nuisance. You must show it respect, not resistance. Therefore, When you reach your first 100,000, understand this. You finally bought yourself a new kind of freedom. Not the freedom to spend, but the freedom to wait. And in investing, waiting is the place where all the money is hiding. Most people cannot stand still long enough to find it. Once compound interest is on your side, your main job is simple. Don't mess it up. It sounds banal, but it is the hardest thing in the world because stupidity is the most powerful force in finance. It destroys faster than compound interest builds. I have said this 1,000 times. It is not greed, not envy, and not bad luck that ruin people, but their inability to sit still. Most investors go broke not because of ignorance. They go broke because of impulsivity. They cannot stand that others are getting rich faster. So they chase, copy, and overextend. And then they learn the oldest rules of compound interest. To build takes decades. To kill takes one stupid decision. I have seen it all. People who turned $100,000 into $900,000 and then back into $30,000 because they got bored and decided to optimize. They traded discipline for excitement. They thought activity equals intelligence. It doesn't. It equals friction. In my world, doing nothing is often the smartest thing you can do. But people are programmed for movement. They mistake busyness for progress. When stocks fall, they panic. When they rise, they rush to chase. They forget that the game is played in decades, not days. Patience is a superpower precisely because it is so rare. Warren and I made most of our money doing nothing. We waited, and waited. Then once every few years, when the market collectively went mad, we acted. That is when discipline pays like a slot machine. But the key is that most of the time you must endure boredom. People don't like to hear this. They want formulas, secrets, insider tips. They want investing to be like gambling with excitement and adrenaline. But excitement is exactly what destroys them. If you want to get rich, play the long game. If you want to stay poor, chase thrills. It's not that complicated. There is an old saying, never interrupt an enemy when he is making a mistake. In the market, your enemy is impatience. Every time someone sells out of fear or buys out of greed, they transfer a piece of their future to someone more rational. That is why I spent my life preaching avoidance, not genius. You don't need to be a genius. You just need to avoid stupidities. And stupidity has several predictable faces: overconfidence, leverage, envy, ego. Each of them can bankrupt even the smartest person. I met people with genius IQs who couldn't stop playing with margin loans. I saw fund managers destroy a 20-year reputation in 6 months because they wanted to beat the market. They forgot that to survive means to win. The market doesn't care how smart you are. It cares how long you can stay solvent. Using leverage, debt specifically, is the most seductive form of stupidity. It makes you feel powerful right before destroying you. Debt magnifies profit, but it also magnifies idiotism. And since most people have more idiotism than skills, you can guess how it ends. The smartest investors I know act with fear, not with arrogance. They respect risk. They accept uncertainty. They know they can be wrong and plan accordingly. I never met anyone who burned out from excessive caution, but I met plenty of those who burned out thinking they were invincible. Avoiding stupidity is a full-time job. It means saying no most of the time. No to greed, no to speculation, no to other people's enthusiasm. It means living within your means, even when you don't have to. It means staying rational when the crowd goes crazy. And it means accepting the fact that you will look stupid for long periods of time, while everyone else chases shiny trinkets. This temperament cannot be taught in a classroom. It is forged in boredom, pain, and patience. And once you master it, you realize something powerful. You don't need to be right all the time. You just need to avoid catastrophic mistakes. If you can dodge the big wipeouts, compound interest takes care of the rest. Most people lose because they try to turn investing into a competitive sport. They check their net worth, like athletes check the scoreboard. They are obsessed with who is winning this month. But money is not a sprint. It is a marathon in quicksand. The faster you move, the deeper you sink. Winners are those who know when not to move. I like to think of wealth as a fragile ecosystem. It doesn't need excitement, it needs stability. You quietly tend to it, carefully prune it, and protect it from pests like greed, envy, and stupidity. That is how you survive long enough to thrive. You will never hear this on TV because it doesn't sell courses and doesn't generate clicks. Doing nothing does not trend on social media, but it is the most profitable philosophy ever invented. Any fortune that lasts a long time is built on restraint, not glitter. So, if you want to protect your compound interest, protect yourself from yourself. Learn to sit still. Learn to ignore the noise. Learn to look stupid for a while in exchange for wealth in the future. Because in the end, wealth belongs not to the smartest, it belongs to the calmest. As soon as people get a little money, they start spending as if trying to prove something. Usually, they only prove how insecure they are. I watched this pattern destroy more fortunes than bad investments. Someone finally reaches 100,000, maybe 200,000. And instead of building further on this, they celebrate by inflating their life. They call it rewarding themselves. I call it pressing the self-destruct button in slow motion. They upgrade everything. The car, the apartment, restaurants, even friends. They confuse comfort with progress and never notice how their expenses grow faster than compound interest can keep up. It is like running on a treadmill and wondering why you are still in the same place. Lifestyle inflation is not a luxury problem. It is a mindset problem. You start believing that your past discipline was just a temporary phase, not a lifelong habit. You forget that the goal was freedom, not showing off. When I earned my first real money, I didn't celebrate by buying toys. I celebrated by buying time. That is what wealth is for, to relieve pressure, not to invite more of it. But people love impressing strangers who don't care. They buy cars for people who won't ride in them. They buy clothes for people who won't notice them. They buy houses so big they can't fill them with genuine company. It is all a trap disguised as success. Let me tell you something unpleasant. Every dollar you spend to look rich postpones the day when you actually become rich. When your income grows, the worst thing you can do is expand your lifestyle at the same speed. This chains you to a job that doesn't make you happiest and kills the compound interest engine you built for years. I know people earning $1 million a year who are more stressed than when they earned 50,000. Why? Because they scaled stupidity along with income. They learned nothing from need except the ability to spend abundance. This is not financial growth. This is just a fancier kind of poverty. I once said that envy is a really stupid sin because you don't even get pleasure from committing it. Lifestyle inflation is envy's twin brother. You buy things not because you need them, but because someone else has them. And then you end up trapped in what I call the cycle of upgraded misery. The furniture is nicer, but the anxiety is the same. The view is better, but the stress is worse. The things are more expensive, but the freedom is less. When you are young and poor, saving seems hard. When you are older and rich, staying frugal seems even harder because now you can afford excess. And resisting it requires having a backbone, not just discipline. If you define yourself through your restraint, you will survive success. If you define yourself through your things, you will drown in them. Do you understand? Real wealth is invisible. It is not the car, but the ability to walk away. It is not the house, but the absence of a mortgage. It is not the vacation that dictates your schedule. And this is exactly what most people never understand. Financial freedom is not about more money. It is about less dependence. The higher your expenses, the more you depend on luck, on income, on good times continuing. And I don't like depending on luck. I like sleeping soundly. I like knowing that if the world collapses tomorrow, I will be fine. That is true wealth. Peace, not showiness. I met rich people who are poor in everything that really matters. No, it is addiction. Their money owns them. They are not managing wealth. They are maintaining an image. And when the next crisis comes, and it always comes, these people panic. They sell at the bottom, borrow at the peak, and wonder why life feels like a treadmill again. You cannot multiply capital when your ego demands applause every month. That is why I tell people, if you earn more money, do not raise your standard of living. Upgrade your mindset, train your patience, train humility, train the ability to delay gratification. When you reach your first 100,000, you are on the threshold of strength. When you resist lifestyle inflation, after that, you are on the threshold of freedom. A funny thing about compound interest, it needs peace to work. If you are stressed about maintaining an appearance, you have already lost half the game. People ask me, Charlie, what is your biggest financial secret? It is not a secret. It is a habit. I lived below my means for decades, even when I didn't have to, because I understood one simple thing. Every dollar I didn't spend was a soldier working for me. Every dollar I wasted was a deserter. The rich stay rich not by earning more, but by protecting what quietly multiplies. So, if you ever get to those first 100,000, don't let excitement turn into stupidity. Don't let new income become new chains. You built your freedom. Don't sell it back for a leather seat and a fancier watch. Because if you spend your wealth proving it exists, it won't last long. The longer I live, the more convinced I am of one simple truth. Most people are incapable of thinking beyond next week. They are obsessed with small numbers, daily prices, monthly salaries, quarterly results, and completely miss the arithmetic of time. They want to get rich in 5 years and never realize that the biggest fortunes are built quietly over 50. Everyone wants compound interest. Almost no one wants to wait for it. That is the paradox. Time is the greatest multiplier, and yet most people treat it as a nuisance. They check stock tickers every 10 minutes, as if looking at the thermometer can make the temperature rise faster. They panic at every market drop, as if the long term was canceled. They measure success in days, not decades, and then wonder why they never feel free in the long run. Short-term thinking is the most expensive habit you can have. When Warren and I invested, we didn't predict the next quarter. We imagined the next quarter century. That is why we rarely sold anything. Every sale interrupts compound interest. Every trade is an admission that you ran out of patience. We made decisions based on where we wanted to be decades later, not where the market was this morning. It is amazing how much simpler investing becomes when you stop needing constant stimulation. But to think long-term, you must first accept boredom. And boredom scares most people. They need noise. They need movement. They cannot stand silence because it forces them to think. The best investors I know are not the loudest, they are the calmest. They understand that volatility is just the entrance fee for getting long-term returns. They don't interpret short-term pain as failure. They view it as rent paid to time. When you think in decades, you start seeing wealth differently. It is no longer a number. It is a system, a self-reinforcing flywheel running on patience, discipline, and restraint. You start understanding that the goal is not to quickly double your money. It is to never lose it irretrievably. You stop trying to predict the next big thing. You start asking deeper questions. Is this sustainable? Is this understandable? Can I sleep soundly owning this for 20 years? That is how adults think about money. The irony is that the longer your time horizon, the fewer decisions you have to make. And fewer decisions mean fewer chances to make a stupid one. That is why Warren and I built Berkshire exactly like this. Slowly, carefully, and with brutal patience. We didn't chase what was hot. We bought what was durable, and we were willing to look stupid while being right. This is the true test of long-term thinking. Can you endure mockery? Most people can't. They need approval. They crave reassurance. They want their returns now, or at least the applause that comes from pretending they have them. So they jump from one strategy to another, changing course every time the wind blows. And they call it flexibility. But it isn't flexibility, it is fragility. When you think in decades, volatility becomes your friend. It hands you bargains. It weeds out weak hands. It rewards the few quiet and rational ones who know how to wait. There is a reason why we like companies like Coca-Cola and See's candies. They are simple, understandable, and built to last. They don't need to reinvent themselves every 5 years. They just sell small pleasures to generations of people with the same sweet tooth again and again. That is the power of patience. It allows ordinary things to become extraordinary through repetition. But here is what people miss. Long-term thinking is unnatural. It is trained. Your brain fights it at every step. It screams for novelty, for control, for excitement. You must suppress this instinct with structure and discipline. You create systems that facilitate patience, automatic investing, modest lifestyle, low information diet, few decisions. It is like gardening. You cannot pull plants to make them grow faster. You water them, wait, and trust time to do the rest. When you think in decades, you stop comparing, you stop rushing, you stop explaining yourself to people who don't understand compound interest. And the miracle is that you become calmer because you finally understand that wealth is not a finish line. It is a rhythm, a steady rhythm of time, quietly doing its work in the background while you live your life. Most people die exhausted because they sprinted all their lives for things that only patience could give. So, if you want to be rich, stop thinking about how to get rich. Think about how to stay rational for the next 30 years. That is the real advantage. That is the part no one wants to hear because it is too simple, too slow, and too sensible. But it is sanity that wins, always has, and always will. If I could remove one emotion from every investor's brain, it wouldn't be fear or greed. It would be envy. Envy is the stupidest of all emotions because it serves no purpose. You cannot get pleasure while committing it, and it doesn't help you at all. It is miserable suffering you inflict on yourself. I watched envy destroy more wealth than recessions ever could. It makes people abandon good plans for bad ones. It convinces rational people that they are missing out on something and turns smart investors into jealous gamblers. You can be on the right track, multiplying capital slowly, steadily, sensibly. Then some idiot on the internet claims he increased his money 10 times in 6 months. And suddenly, your brain says, "Why not me?" This thought is poison. It forces you to trade discipline for dopamine. It turns a long-term strategy into short-term stupidity. The truth is that you never envy wisely. You only see the highlight reel of someone else's luck. You don't see their sleepless nights, their leverage, their upcoming margin calls. And even if they truly made a fortune, so what? Their success doesn't pay your bills and doesn't multiply your savings. It only distracts you from your own compound interest machine. The secret of wealth is to keep your eyes on your own garden. Tend to it patiently. Don't dig it up every time the neighbor's flowers bloom. The world is full of noise designed to trigger envy. Financial media lives off it. Social networks thrive on it. They show you yachts, penthouses, and private jets. Never the bankruptcies that follow. It is all bait for your attention. And if you aren't careful, it will steal your peace even before it steals your money. I've seen this at all levels, from small investors to billionaires. No one is immune. Even among the rich, envy doesn't die. It just changes its outfit. The guy with $1 million envies the guy with 10 million. That one envies the one with 100, and that one envies the one on magazine covers. It never ends because envy is a game with no finish line. That is why I learned early on to avoid comparisons altogether. When you compare, you lose twice. Once when you feel inferior, and again when you act irrationally because of it. We built Berkshire Hathaway on the exact opposite principle. We didn't compete with other investors. We ignored them. We didn't chase quarterly returns. We chased rational decisions. And ironically, by refusing to compete, we outperformed almost everyone. That is how irony works. Discipline looks boring, but it wins every time. You will find that life becomes calmer as soon as you stop asking, "Am I richer than him?" and start asking, "Am I wiser than I was last year?" Because wisdom also accumulates like compound interest, and unlike money, no one can take it away from you. Let me be blunt. You won't be content with 100,000. You won't be content with 1 million. If you cannot keep calm during the accumulation process, you will never be calm after achieving success. A mind that chases envy will never catch peace. Every time I see people bragging about their latest profits, I remember 1970. Markets were wild. People were in euphoria, and everyone thought they were a genius. Then the crash happened. Half of these geniuses disappeared along with their money. The rest quietly learned humility. Humility is what keeps compound interest alive. Arrogance kills it. When you stop comparing, you start thinking clearly. And clear thinking is the rarest currency there is. You start seeing that wealth is not a competition, it is a consequence of rational behavior maintained for an unreasonably long time. That is why envy is so destructive. It short-circuits time. It forces you to act before compound interest can reward you. It turns patience into panic, while the world rewards the opposite of envy. The more detached you are from what others are doing, the more freedom you have to do what works for you. I am not saying you shouldn't admire success. Admiration is useful. It inspires you to learn. But the moment admiration turns into envy, you have already lost the point. Envy says, "I want what he has." Wisdom says, "I want the discipline that got him there." One makes you restless, the other makes you rich. Therefore, When you catch yourself scrolling through someone's highlight reel, stop and remember. Compound interest doesn't care about their story. It cares only about your behavior. And behavior, unlike luck, is completely under your control. You cannot obtain wealth through envy. You can only come to it through behavior. People like to complicate what works. It makes them feel smart. But in investing, intelligence often backfires. The world is full of smart people doing stupid things because they cannot stand simplicity. They think success must involve complexity, formulas, and exotic terms that only they understand. That is how they justify their mistakes with vocabulary. But wealth doesn't care about your complexity. It rewards clear thinking. It punishes unnecessary sophistication. Warren and I built our fortunes on childish questions. Is this business easy to understand? Does it have long-term economics? Are the people running it honest and competent? That's it. No algebra, no buzzwords, just common sense applied consistently. It's funny that most people cannot do this because it is too simple. They would rather feel busy than be effective. They want to sound smart, not be smart. And this difference costs them millions over a lifetime. The market rewards patience, clarity, and discipline. But most investors are allergic to all three. They chase innovations, speculations, or trends. They buy complex funds they don't understand, managed by people they will never meet, filled with assets whose names they cannot pronounce. This is not investing. This is intellectual cosplay. I always said, if you can't explain to a fifth grader why you own something, you probably shouldn't own it. Complexity hides risk. Simplicity exposes it. And people who understand this principle truly understand it. Build fortunes that last for generations. Take See's Candies, for example. A simple business selling chocolate. No algorithms, no leverage, no mystery. Just a good product, loyal customers, and consistent management. We bought it in the early 1970s, and since then, it has quietly multiplied. That is what most investors miss. They think wealth comes from excitement. It doesn't. It comes from repetition. Do the right things again and again, and stop trying to improve what already works. Complexity gives the illusion of control, but usually leads to confusion, and confusion leads to mistakes. You cannot manage what you do not understand. That is why I avoid things I cannot explain. You can call it conservatism. I call it survival. You don't need 100 ideas to get rich. You need 1 or 2 good ones that you deeply understand, and then patience to let them work for decades. That is how compound interest actually works. But people ruin everything by overmanaging. They poke, nudge, tweak, and tinker until they cancel out years of quiet progress. If compound interest were a machine, most investors would shove a wrench into it every few weeks just to make sure it is still running. And then they are surprised when it breaks. The best investors are lazy in the right way. They work hard once to make a sound decision, and then let time do the heavy lifting. They understand that effort does not equal result. Only sound judgment matters. Here is another truth. The simpler your system, the easier it is to stick to it when things get tough. If you rely on complexity, one crack, and the whole structure collapses. But if your principles are simple, save, invest, wait, you can survive any storm. During a crisis, simplicity is your shield. When everyone else panics, your calmness is your advantage. In 1974, the market was crashing, and panic was everywhere. We were buying not because we had better data or algorithms, but because we had clarity. We knew that a good business bought at a fair price always wins in the long run. It wasn't genius, it was discipline. And discipline multiplied by time looks like genius. People think they need more information to make better decisions. No, they need fewer distractions. They need to stop outsourcing their thinking to experts and start trusting logic. I once said, take a simple idea and take it seriously. This is not poetry. This is survival advice. If you take simple principles seriously, you will outperform the vast majority of people who chase sophistication, because sophistication is often just insecurity in disguise. It is what people do when they lack conviction. If you truly understand what you own and why, you can sit out anything. Recessions, crashes, noise. Because simplicity gives you confidence, and confidence gives you endurance. And endurance is where compound interest hides its magic. You don't need 100 moving parts. You need a few things done right and repeated quietly. Most fortunes are lost by people who couldn't stop improving what was already working. They traded simple excellence for complex mediocrity. So yes, simplicity is not weakness. It is the final stage of sophistication. Because when you have truly mastered something, you no longer need to pretend it is complicated. You just let the results speak. The strangest thing about compound interest is that if you do everything right, it eventually stops needing your help. Your money becomes self-sufficient, quietly earning more while you live your life. That is when wealth moves from effort to autonomy. Most people never reach this point because they keep interrupting the process. They keep tinkering, chasing, and reacting, unable to believe that something so simple can be so powerful. But the truth is that real wealth doesn't scream, it hums. When your portfolio earns more in a year than your job, you have crossed an invisible threshold. You no longer work for money. Money works for you. And if you are wise, you will get out of its way. This is the moment when your main job shifts from making money to protecting it. And protecting money requires a different psychology. Calmer, more modest, quieter. People think protecting wealth is hedging, diversification, or exotic strategies. No, it is behavior. It is refusing to do stupid things when you can finally afford them. I have seen many rich people lose everything because they thought success meant the rules no longer applied to them. They doubled down on risk, ignored humility, and called it confidence. Then reality came for them, as it always does. The moment you think you are too smart to lose money, you are halfway there. At Berkshire, we learned to love boring consistency. We would rather look slow and sensible than fast and stupid. That is why we survived while others imploded. People forget, when you are rich, you no longer need to try to hit a hole-in-one. You just need to keep what you have, safely multiplying. Preservation beats acceleration. The irony is that most people are more careful with $10,000 than with $10 million. When they were at zero, they were terrified of mistakes. When they are rich, they start believing in miracles. That is when greed arrives in the costume of ambition. I said this before, if you are already rich and continue to take high risks, you are not ambitious, you are stupid. There is a point where it is enough. It is truly enough. But this idea is almost extinct in modern culture. Everyone chases more. More growth, more leverage, more applause. They forget that more has a hidden price. Peace. You trade serenity for anxiety, and the exchange rate is terrible. I always believed that wealth without peace of mind is just another form of poverty. And peace doesn't come from owning everything. It comes from wanting less. By the time you reach your first 100,000, you proved you can build. By the time you reach 1,000,000, you must prove you can keep. That means turning away from envy, from speculation, from the constant itch to do something. Because the richest person is not the one who multiplies endlessly, but the one who knows when to stop. In my later years, I realized something else. True freedom is not having more money. It is not needing money to feel safe. When your identity stops depending on your balance sheet, you have won a game most people don't even suspect they are playing. This is the maturity compound interest gives you. First you chase returns, then you chase wisdom, and in the end, you just chase peace. People think this sounds poetic. It isn't. It is practical. Peace protects you from bad decisions. And bad decisions, not bad markets, destroy fortunes. The great irony of compound interest is that it requires you to do less the richer you become. React less, tinker less, speak less. You stop trying to beat the market and start trying to outlast it. You stop caring about headlines and start caring about habits. And you realize the game is not about numbers, it is about behavior. Wealth that lasts is built on boredom, discipline, and humility. 3 traits modern society considers flaws. But people who understand this, who quietly protect their compound interest, eventually end up with wealth that doesn't just survive a crisis, but sleeps through it. Therefore, when your money no longer needs you, leave it alone. Don't touch it. Don't show it off. Don't turn it into a circus. Let it work silently, because if you cannot leave your wealth alone, it never really was yours. You were just looking after it until your next mistake. The real goal is not to die rich, it is to live rationally. And once compound interest has done its job, you finally earn the luxury of doing nothing because you spent a lifetime doing everything right. The smartest thing you can do after winning the game is to stop playing. But almost no one does this. They keep swinging the bat, keep chasing, keep betting, because they don't understand that compound interest already won for them years ago. Their wealth is on autopilot, but their ego still wants to steer. That is how fortunes vanish, one unnecessary move at a time. When you finally have enough, you must protect it like a shrine, because enough is a rare state in a world built on wanting more. Most people don't go broke chasing poverty. They go broke chasing excess. They don't lose money because of bad luck. They lose it because they cannot stop reaching for something. I learned early on that enough is the only number that gives you peace. And peace, once you have tasted it, is worth more than any extra zero in your account. But you won't learn this from Wall Street. Wall Street will tell you that standing still is failure, that your net worth must grow infinitely, that every year must be a record one. That is nonsense. Trees don't grow to the sky, and your expectations shouldn't either. We live in a world where no one retires from greed. They just run out of time. The truth is that every game has a finish line, but most people run in circles. They mistake motion for purpose. They cannot distinguish wealth creation from toy collecting. You win the game when money no longer controls you. You lose it when your desires still do. That is why enough is so powerful. It is not resignation, it is mastery. It means you stopped allowing external numbers to dictate internal peace. I knew billionaires who were miserable and teachers who were free. The difference wasn't intelligence, it was perspective. The teacher knew what enough looked like. The billionaire didn't. So the teacher slept soundly while the billionaire checked his stock price before bed. Don't get me wrong. I am not glorifying poverty. I am glorifying control. Control over your time, your emotions, your needs. That is real wealth, when you can choose your day, not sell it. You see, compound interest applies not only to money, it applies to peace, relationships, wisdom. If you continue to protect your time, your calmness, your independence, they also multiply. And those are the assets that will never crash. People often ask me, Charlie, what is the end goal? It is simple. Rational independence. To live life by your own judgment, not owing anyone financially, emotionally, or intellectually. Never being forced into stupidity by debt, envy, or ego. That is the point of the whole game. Money is just a byproduct of a rational life. And if you forget this, the game starts playing you. Warren and I didn't spend our lives trying to become the richest people in the graveyard. We spent them trying to live well and think clearly. And it just so happened that we got rich along the way. I met people who spend their youth chasing wealth and then spend wealth trying to get back their youth. That is not intelligence. That is tragedy. The goal is balance. Earn patiently. Spend wisely. Think clearly. And stop when you have won. If you created your first 100,000, you proved you can do hard things. If you created your first million, you proved you can stay rational. But if you can walk away from the game with peace in your soul, that is the ultimate victory. Because the point of compound interest is not to die with the biggest pile. It is to die knowing you lived on your own terms. I always believed that a rational mind is a much greater gift than a huge fortune. Because a rational mind creates both wealth and peace and protects them from stupidity. So, if you want to honor compound interest, learn to stop when it tells you to. Learn to say, this is enough. This is peace. This is the moment I stop reaching and start living. That is not surrender. That is a sane victory. In the end, life is just another compound interest machine. Your thoughts, your habits, your patience. Feed it wisely, protect it from noise, and one day it will quietly hand you everything you ever needed. And when that day comes, don't ruin it by chasing what you already have. Just lean back, stay humble, and let time finish the work you started, because that is the real secret no one wants to hear. You don't need more. You just need to stop losing what you have already earned. And that is how, my friends, you win and finally stop.